Let's jump right in and try to clear up one of the biggest questions in personal finance. Should you put your money into an annuity or should you stick with traditional investments? We're going to get straight to it.
If you feel like you're being pulled in a million different directions, you are definitely not alone. The bank is pushing you towards CDs, your broker is talking up stocks, and then an insurance agent comes along talking all about annuities. It can make your head spin. But here's the secret. They can all be the right choice. The real truth is that the best financial tool always depends on the job you need it to do. So it's not about finding the one best investment out there. It's about matching the right product to your specific goal. And that's what we're going to do right now. Break it down goal by goal.
Okay, let's start with a really common one. You want your money to grow, for sure, but you absolutely positively do not want to risk losing it in the stock market. You're looking for safety, stability, and growth you can count on.
Now, for this goal, most people's minds immediately go to a certificate of deposit, or a CD. But there's another really powerful alternative called a multi-year guaranteed annuity. We just call it a MYGA for short. And you can pretty much think of a MYGA as a CD that comes from an insurance company, and it often has some really key advantages.
So, the biggest difference between the two really comes down to taxes. With a CD, you have to pay taxes on the interest you earn every single year, and that creates this kind of drag on your growth. But with a MYGA, that interest grows tax-deferred. That means your money can compound way faster because you're not giving a slice to taxes along the way. And believe me, over a few years, that difference can be huge.
So the bottom line here is this. If you're a conservative saver, you want a better yield than what a CD is offering, and you want to maximize your growth without any market risk, a MYGA is literally built for that job.
All right, let's move on to our next goal. This one is massive for anyone who's getting close to retirement or is already there. We're talking about creating a stream of income that you are guaranteed not to outlive. It's like creating your own personal pension.
For this goal, we look at something called a fixed indexed annuity, or an FIA. Here's the basic idea. It's a contract where your interest is linked to a market index, something like the S&P 500. So, when the market goes up, you earn interest. But, and this is the important part, if the market crashes, your principal is 100% protected from any losses. It's the best of both worlds, upside potential with downside protection.
So, how does this annuity actually create income that lasts a lifetime? Well, you can add a special feature to it. It's called a guaranteed lifetime withdrawal benefit. It's basically a promise from the insurance company to pay you a set income for the rest of your life, even if your account balance hits zero. Now, compare that to something like a bond ladder. Once those bonds mature and pay out, the payments just stop. With the annuity, the insurance company takes on the risk of you living a very, very long time, guaranteeing you can't outlive your money.
I mean, this is a total game changer for retirees who don't have a traditional pension and are, frankly, worried about their savings running out. It directly solves that fear of outliving your money.
Okay, but what if your goal isn't safety or income? What if it's all about maximum long-term growth? Maybe you have a long time horizon and you're comfortable with taking on more risk to get those higher potential returns.
This brings us to that classic showdown, stocks versus annuities. And the difference between them is really fundamental. When you buy a stock, you're buying a piece of a company. You're an owner. You share in the profits and in the losses. But when you buy an annuity, you're buying a contract with an insurance company. You're trading that unlimited upside for a contractual guarantee.
So the trade-offs here are pretty clear. Stocks offer the highest potential for growth, period. But they also come with full market risk. You can absolutely lose your principal. Annuities, on the other hand, they protect your principal from any losses and they give you that tax deferral, but that safety usually means there's a cap on your potential returns. It's that classic risk versus reward choice, and the right answer really depends on what you're trying to accomplish. Generally speaking, it kind of boils down to your stage of life. Younger investors, they've got decades to recover from a market downturn, so they often lean on stocks for growth. But retirees who just can't afford a major loss, they lean on annuities to create that stable, guaranteed income.
So, after looking at all these goals, you might be thinking, okay, do I have to pick just one? And the answer is a resounding no. In fact, the smartest financial plans don't choose just one tool, they use several, each one for its specific strength.
A really well-built strategy uses each tool for its specific job. You could use an annuity to create a foundation of guaranteed income that covers your essential bills no matter what. Then you use stocks and ETFs to drive that long-term growth for all the fun stuff. And, of course, you keep liquid cash and CDs for emergencies. See? It's not about choosing one. It's about combining them to build a much stronger financial house. And by thinking this way, in terms of goals, you naturally avoid the most common mistakes people make. Things like chasing the highest returns without a plan, or using a growth tool when you really need income. And maybe the biggest one of all, underestimating just how long your money is going to need to last. A goal-based strategy protects you from all these pitfalls. Now, I know putting all these pieces together can seem pretty complex, and that's exactly why navigating these options is always easier when you have some expert, independent help to guide you through it all.
At the Annuity Expert, this is exactly what we do. We specialize in helping people find the right annuity for their specific goals. And because we're an independent broker, we compare products from hundreds of top-rated insurance carriers to find the absolute best fit for you. And our services are always completely free to you. If you'd like to explore your options, just give us a call at 770-755-5165 or visit us online at annuityexpertadvice.com. We're here to help you build a clear path to your financial goals. Thanks for tuning in.